Alrighty, guys, welcome to Rollup TV, Monday, September 29th. It is 11 a.m. here in Florida. I'm in Tampa. I'm back home. And yeah, Robbie's in Singapore. He'll be joining us later in the week. But guys, I got some fun stuff to show you. We got a great segments today. We got Electric Capital. We got Avi and Mike. And we have the team behind Bullet. Believe they have some news coming out imminently, as well as here we also have IP World coming on. So fucking hope you're not sidelined, because we're ripping, boys and girls. I got some cool stuff to show you that I've been building on the stream over the weekend. I'm gonna just get these links set up and make sure everyone's dialed. So if you guys are in the show, if you're on YouTube, check it out. Get in the chat. I will be reading the chat on YouTube and Twitter. GM Advisor, GM Coca. Good to see you guys. GM. Good to see you. Good to see you. GM. Coca. D Advisor. All right, guys. I'm gonna give away some base codes today, and it should be good. So stoked on that. And yeah, looks like we're all good to go so far on every platform. Testing out Restream today. Shout out Restream. Shout out to the market. What we're going to do first today is we're going to pull up some little Yahoo Finance news and do a little reaction to it. So we got 2 minutes left till coverage. We've got Avi and Mike getting ready in the back to come in. We're going to get those guys up and playing ASAP. And then we're going to have our lovely friends from the Bullet team, as well as our lovely friends from the team behind IP World. So, guys, thanks for being here. Bitcoin's looking in, trading at around 113 today. Love to see it. Yeah, guys, like I said, I am active in the Restream chat. I'm active on YouTube chat and 10 codes. Guys, if you're watching right now, throw us a like on YouTube, throw us a like on Twitter. I'm giving away base codes today. Guys, if you have a base code, GM8, GM 𝘠𝘬𝘦𝘴𝘪, GM Aria, any comments on Turtle? I don't know what Turtle is. 𝘠𝘬𝘬𝘴𝘪, could you give me a better rundown of what Turtle even is? I would appreciate that. Leo, if you're listening here, let's get some background music playing if we don't already have some. Be good to get the juices flowing. Any comments on Turtle? GM. Guys, I'm giving away base codes. If you're seeing this and you're in the comments on YouTube, tell me what you're most bullish on. What are you most bullish on this week? What token are you most bullish on? What project are you most bullish on this week? Tell me about it. Tell me about it. Tell me about it. Get me going. Get me fired up. What are you most bullish about? Any comments on Turtle? I don't even know what Turtle is. I'll tell you that much. Beautiful. Beautiful, beautiful, beautiful. GM. All right, guys, we got a great lineup today. Pretty stoked. All right, Leah, I'm going to go ahead and pull up the stream on Yahoo. Let's pull that up and let's see what they're saying. Alrighty, guys. Welcome to a new Rollup TV experience.
Coming up this hour on Market Catalyst, first up, as we enter the final days of the third quarter, we'll look at how seasonality will affect the fourth.
October seasonality is fucking bullish. I'm telling you, it's Q4. Last day of Q3 today or tomorrow.
And the why behind the high. We'll dig
fucking bullish. Q4 is coming, baby.
Shares as the company outperforms the majority of the S&P 500.
Let's go.
90 minutes into the start of U.S. trading, I'm Julie Hyman. Let's get
Hey, Julie, how you doing?
Markets here. We have trading week, I should say, last
Show us
week.
NVIDIA, baby. That thing's ripping.
Coming back to some extent today, especially on the tech side.
𝘸𝘪𝘵𝑥𝑦𧑧. They were the ones raising all liquidity for Katana, and TAC, and just announced tokenomics. I'm bullish. Turtle Club. Yeah, I like those guys.
Down 40 points right now. The S&P 500 up about 0.4%.
I'm going to text them, actually.
Western Digital, a maker of hard disk drives and data storage, one of the top performers on the S&P 500 this year. It's up over 150% year to date. In the past quarter, it's
whoa, does she really have two of herself on the screen? Did you guys fucking see that? That's trippy. That's trippy.
One of them is going to join us now to talk about the why behind the high.
Why behind the high? Western Digital. I've never even heard of this company.
Research analyst Kevin, thanks for being here.
Hi, Julie. Thank you very much.
Hey, Julie. So Hyperliquid. What happened over the weekend with Jeff sparking a fuse? $50,000 of NFTs dropped to Hyperliquid random addresses. This guy Jeff on the screen has no fucking clue what Hyperliquid is, but people in the trenches just absolutely got fired up. Pretty epic. Bros out here hustling live every day, built different. Yes, sir. GM BGF, GM Solar Ether Punk. We run until mid-October, sell off hard in November, and then full bull mode into year end. Fuck it, we ball. I'm down.
That's what Western Digital provides is hard disk drives.
Quite bullish on the Q4. Yes, sir. DeFi Mentalist. I fuck with that little pudgy penguin, bro. That thing's fire.
Every data center needs lots of
pudgy.
storage. The more data you have, the better your AI outcomes will be.
So, Kevin, without getting too technical,
Kevin, why is AI investment infinite?
Drives play. Now, I know I got a hard disk drive in my computer, right, that provides storage. In most PCs, I guess all PCs, they have hard disk drives. When we're talking about the role that they're playing in a data center, what exactly do they do? What function do they serve?
Well, it is just storage of data. So maybe if you even use Yahoo Finance as an example, and all your videos that you have made and you've stored all in hard drives, that's the lowest cost, and you use that data to run algorithms, artificial intelligence algorithms, and maybe you can find out which of your shows gets the best ratings, or you can optimize what your shows would be. But the hard drive has to be used to store this.
I mean, dude, you can justify whatever you want. The chart's up 20 or a double in like 6 months. All she wants to know is who the hell's buying this thing.
So
how are we going on about here? Thank you, bro. Just sold it. We'll have to get a new one and match PFP. Yeah, bro, do it. I mean, look, I think pudgy penguins are sick. They're gonna have another run. We see punks are getting fired up again. So, dude, give it a shot.
Yes, it is.
We need more of the roll-up clippers. Hey, what up, Ash? Good to see you, bro. DeFi Mentalist, trying to trade my way to full pudgy. Hey, yes, sir.
Made of NAND flash.
Yes, sir.
They use lower power. You can put more data in the same amount of space. So the solid state drives started replacing hard disk drives. So that was a headwind for both Seagate and Western Digital for their longer term growth. But now that, I would say 90% of PCs use solid state drives and not hard drives, they don't have that headwind anymore in revenue. And now it's only going into the cloud data centers, which giving them now revenue growth in 15% per year over the next 5 years. So they're experiencing new levels of growth, and they're also experiencing new levels of profitability. And that's what's really changed.
All this guy's saying is AI investment is practically infinite, and we're just going to keep mooning it. So shout out to this guy. All right, guys, I think we got Avi and Mike in the back ready to get set up. So we're going to flip off of this for now, give it a pause, and we will be back on some of the more reaction and that type of stuff shortly. I think, guys, that is our new setup. So congrats to us for ripping that. We had a long weekend, a lot of setup going on over the weekend. I'll tell you that, guys. But the money's coming in, baby. Let's pump it. All right. So what I'm gonna do is we're gonna get Mike. All right, we're gonna get Michael and Avi of Mike's from EtherFi and Avi from Electric Capital, and we are going to bring them up onto the stage. So we're going to give it a quick sec here. And give me a quick sec. We're going to get them set up, guys. Let's play some music in the background, Leo. If you're hearing this, let's get some music going. Let's get that synthwave track going. That was it, Asher or something. That thing's a vibe. If you guys are watching, I'm giving away base codes. Guys, just DM me on Twitter, 𝘠𝗫𝗦𝗧𝗏 Ash, or Ether. If you want a base code, give me, well, just DM me on Twitter. I'll get you a base code and get that taken care of. Give me a sec. Let's get some of that synthwave music playing, Leo, and we'll be ready to go in a short. So we yeah. Let's set up this, our run of show that cut off a little quick here. We have busy building out the entire stream over the weekend. Right, let's get this guy in here. And give me a sec. Sideline, question mark, question mark, question mark. Are you sideline still? I would hope that you're not sideline because we're about to go to the moon. Q4 tomorrow, baby. Q4 coming. Look at Q4 2017. Look at Q4 2021. There's one reality. That reality is the pump. I'm sorry to break your bearish bones if you're bearish, but this is the reality. We will pump. Laptop can't keep up. Yeah, dude, I need to get a better laptop. This thing's a good one, but all right, guys, we have Mike and 𝘐𝗫𝗦𝗧𝗏 ready to go here. I'm gonna bring them up, and we will get started, guys. So let's go. All right, guys, welcome to the Rollup TV. Avi of Electric Capital and Mike from 𝘰𝘃𝑦. Guys, good to have you on. Mike, good to see you. Avi, first time on the show. Good to have you guys.
Good to see you. Thanks for having us.
Yeah, great to be back.
Mike's on his way to Singapore, guys. So if you hear a little bit of ding ding in the back, he's on his way to show 𝘰𝘃𝑦 to the masses. Avi, it's your first time on the show, man. Quick intro about yourself, how you got into crypto, or kind of how Electric Capital formed, what your thesis is. Yeah, man, thanks for joining.
Yeah, absolutely. Thanks for having us. Yeah, my background, most of my career was an entrepreneur. I started and sold some companies, most recently to Facebook, and then ran some big teams there, and then started angel investing, and was fortunate to be involved with a bunch of companies that have gone on to do well in and out of crypto. So things like Notion and Figma and Airtable, kind of like more vanilla stuff. And then my co-founder Curtis and I, we were doing a lot of more out there stuff. So things like self-driving cars and supersonic airplanes and crypto. This is sort of like, and the crypto stuff was just the most interesting and weird and fun. And it reminded us the most of the internet, like the early internet when we were kids, and we were just too young to participate in a lot of the early internet stuff. And so we said, wow, this reminds us of the early internet. And the more we thought about it, the more we said, oh, this is potentially really transformative. Like if this really works, this changes the entire financial system, like the global financial system. And so we started spending more and more time on it. We were early investors in kind of that 16, 17, 18 era to a bunch of companies and protocols from that time. And a bunch of people started reaching out and saying, hey, what is this crypto stuff? You guys been into it for a while. We'd done some Bitcoin mining in like 2010, 2011. And so some folks here in Silicon Valley knew us, and they said, hey, what is this crypto stuff? Like, is Bitcoin real this time? You know, what's an ICO? Should we somehow be involved? That sort of snowballed into people saying, we don't really understand this crypto stuff at all. And it's different than what we do. You know, a lot of the venture investors here. And so they asked if we would manage their money too. And so kind of a bunch of the GP general partners at a bunch of these other VC firms started reaching out and just asking us to get crypto exposure. And so that's how Electric was started in 2018. And since then we've scaled it up. And so if you look at our like SEC filings, I think the last batch that we did, we manage somewhere around 3.5 billion at this point. So we scaled it up pretty nicely. We mostly, if you look at the investments that we do, mostly we do sort of early stage, you know, our typical sort of seed and Series A investor. So for a lot of the stuff we invested in, we've been pretty early. You can go look at the stuff we've invested in on our website. So that's sort of our bread and butter. Over the years, just by virtue of having been early to things like you know, ETH and Solana and a bunch of DeFi stuff, we've ended up with some good expertise on how to manage these assets on chain. And so this has turned into an interesting sort of strategy for us, where we work with a lot of our portfolio companies to help them bootstrap and get off the ground, and do that in a secure way. And so we've increasingly been doing on-chain stuff for the last few years, and trying to help protocols really just get off the ground. And so we do that now. We work with Mike and co on a bunch of projects, and 𝗗𝘗𝘗𝘬, we're helping manage the assets there and try to drive those on-chain. I think we'll have some announcements coming up in the next couple of weeks. I think we'll help people understand kind of the scale of the possibility there. So anyway, that's a quick intro.
Beautiful. Yeah, it's good to have a venture capitalist who does things on-chain. That's a good signal there. You know, there's quite a stigma against VCs sometimes. So glad that you included that part.
There's a lot of people out there calling themselves VCs that are not actually VCs.
Well, guys, so we have quite the kind of context happening right now. We're very firmly in token launch season, if you will, Q4, Q1. I mean, we are going to see a barrage of mainnet launches across the crypto sphere. We're also very firmly in IPO season. We saw Kraken announce a big raise a couple of days ago. We've seen the likes of Circle go live this year and have massive launches. And I saw one of Yano's posts. The full list of potential IPOs for 2026 is pretty insane. All that happening while treasury companies have been kind of really foaming at the mouth to get crypto exposure and buying billions of dollars of ETH, Bitcoin, Solana, and various other assets down the risk curve. All of that happening while altcoin ETFs are on the verge of getting approved by the SEC for the first time ever. The likes of XRP, XLM, Cardano, you know, maybe not everyone's favorite coins, but these are the ones that are going to get approved most likely. This is the context that we have here in the landscape. Mike, starting with you, when you're looking at this from EtherFi's perspective, from the DeFi perspective, maybe we could just kind of zoom in a bit here. So this is like the macro context. What is happening on the micro? What are you seeing on chain? Where is the demand coming from? Maybe you can just give us a bit of a context for the on-chain ecosystem.
Yeah, well, there's not, aside from 𝘗𝘗𝘗𝘗, which Avichal can talk about, there's honestly hasn't been a ton of impact on-chain from these various digital asset treasury companies. But I mean, I genuinely believe that it's coming, and the amounts of capital that we're talking about here are like pretty substantial. That could really make moves in DeFi. I mean, we're talking tens of billions of dollars that have been, collected, I guess, by these digital asset treasury companies. And the big difference versus the ETFs, which are generally passive. I mean, at best, they can stake, some small portion of their ETH or SOL or whatever, because of liquidity requirements. These DATs are actually able to do stuff with their, with their assets. Now, certain DATs, like, and I may be wrong about this, but my current understanding is 𝘗𝘓𝗦 has explicitly said that they're not going to do anything too exotic in DeFi or anything in DeFi at all. But others, more forward-looking ones like 𝘗𝘗𝘗𝘗 have said that they, in fact, have already done stuff. They've actually already deployed into DeFi. And I think that, we're talking, there's tens of billions of dollars in ETFs. And if you can own something that's generating a yield of, I don't know, 5, 6, 7% on the same asset versus owning something that is generating no yield, in fact, that has a cost associated with it, I mean, it's kind of a no-brainer that people are going to want to own the yield-generating assets. So I think this is huge. I mean, I would have thought that it would have kind of the floodgates would have already opened by now. But look, in the next 6 months, I think we're going to see some real fireworks.
Yeah.
Maybe I can add like 2 points of color there, plus one to everything Mike just said. One, I think on the ETF side, because you can't stake, you are essentially getting inflated away a little bit. I think this is going to change. If you look at kind of the direction the SEC is going in the United States, I think they're gonna have to allow staking at some point. It's just it's a benefit to the consumer. Even with that, I think because of kind of the way ETF redemptions work, like when somebody says I want to sell my shares, you got to sell the ETH on the back end. There's actually some like liquidity management the ETFs will have to do, and so that might mean that they can't stake 100% of their ETH, or if they do, they might have to use liquid staking tokens, or I don't know if the SEC will allow that, or they'll have to sell their staked ETH like a secondary market, you know, because the exit queue is on ETH, and eat some slippage. And so when you start looking at all those factors, I think it'll likely be the case just by the math of it that the ETFs will likely, and at least in the Ethereum case, not be able to produce the staking yields that you would be able to if you didn't have to deal with all that sort of liquidity constraints. It may be different, you know, depending on kind of how like some of these other chains work. Like, you know, if there were a Solana ETF, there might be some arguments that because of the way Solana block production works and MEV and yada yada, that actually might be able to be competitive on the staking. But strictly speaking, on the ETH side, I suspect the ETFs will be a little bit underperforming relative to the native staking yield. The other thing that I think Mike is getting at on the DAT side, where you do have tens of billions of dollars that's come in, one thing I think that's a little tricky, putting on sort of your DAT hat for a second here, is you would absolutely like to be able to go max risk and go generate all the yield that you can. And I think if you think that DeFi is going to have all these great RWA instruments and native you know, DeFi instruments that can generate 10, 15, 20% yield, this starts to look really compelling, right? Like abstractly speaking, you're like, well, if you're sitting on $10 billion and you can generate 10% a year on this, you have a company that's worth 10 billion in assets that generates $1 billion a year in free cash flow, and you need like 12 employees, right? This is like an amazing business, right? This starts to look Berkshire Hathaway-ish, right? You're just spinning cash. So that's the promise of it. Now, the challenge is if you lose ETH, the market will really beat you up, right? So like the whole point is to have max ETH exposure with some additional yield. And so where you turn the dial on that risk exposure is really critical. And so I suspect what's going to happen here is some people like BMNR, right? Like we're just, for disclosure, we're also investors in Tom Lee's thing, you know, in the pipe. We're investors in SBET, Joe Lubin's, you know, on the pipe. Like we're close to those guys and have a tremendous amount of respect for them. One challenge is once you're at that scale, once you're at 5 or 10 billion in ETH, you have to be really careful because so much of the value of your company is driven by the ETH price, that if you lose any amount of ETH because there's a small contract bug or something, the market will really beat you up.
Yeah.
And B, it's hard to move the needle, right? I mean, like, you know, could you today put $10 billion into DeFi and dramatically outperform base ETH staking yield, right? And how much work would you have to do to put 10 billion to work and really outperform? So I think there are like a couple of constraints in the short term that will sort of make it so that all this $10 billion doesn't come in at once. But I agree with Mike that like looking forward, as the risks come down, as the market becomes more comfortable with it, as these entities sort of build up a buffer, you know, because if you're let's say a year into the business and you've been staking and doing some of the other, you know, less risky stuff in our opinion, like from the ETHZ side, you've now built a buffer. Like maybe you got 10, 20, 30 millions. And so if you lose $1 million in DeFi, it's like, it's not the end of the world, right? You're actually still dramatically outperforming staking. So I think like the willingness to go risk on will actually go up over time. We just need to let the companies sort of like build out some buffer of reserves and that they can eat into should there ever be a loss on the DeFi side. That's kind of my read on, I think, how that side of the market will play out over the next like 2 years.
Interesting. Yeah, I think it's interesting that you bring up Berkshire Hathaway because they have a specific workaround in their stock basically that allows them to, you know, be an investment company under the Investment Company Act, I believe like 1940, where people are asking how, you know, why can't we do DATs for stocks like Tesla stock, right? Yeah. Well, it's, you know, you can't do that for securities, but you can for commodities. And so this is like a whole new kind of wedge here that smart people kind of figured out and have now created. And so I expect this to extend for a while. But kind of more on the points that they were making. And Mike, I'm curious how you see these effects. You know, I'm not sure it's so black and white, right? Let's say there's 10 billion in ETH in these DATs. I'm not sure, you know, ETHZilla or you know, Tom Lee's Bitminer or SBET are going to go 100% or zero. You know, I could see a world where it's 10% in 𝘨𝘵, 10% into EtherFi, it's 10% into, you know, and slowly kind of build it up, such, you know, to signal to the market that they're actually taking care of their shareholders, but they're doing it in a strategic way. And so, Mike,
I mean, we can easily absorb 10 billion. I'll just put that out there to Bitmine.
Okay, Tom Lee, if you're watching,
Tom Lee, if you're listening,
all in on EtherFi. And so, Mike, what do you expect the knock-on effects to be to look like from the protocol level, right? Because all these people are valuing these assets right now, looking at their revenues, their TVLs, their growth, you know, things all the way from Aave, Uniswap, Athena, Maker to 𝘰𝘪𝘏, Hyperliquid, Pump.Fun, etc. These are kind of really kind of forming what is looking like somewhat of the Mag 7, if you will, of crypto, slowly but surely. How do you think about the knock-on effects for 𝘰𝘪𝘏 and for all of the protocols mentioned as DeFi TVL rips past 1 billion finally, or sorry, 1 trillion finally?
Yeah, I mean, I think it's going to be positive for sure. I mean, I'll make a note, somewhat on the cynical side, maybe a little bit. And I think this is changing, but DeFi today is still what I would call very Ponzi coded. Even when people are evaluating things in terms of fundamentals, they still see it through this lens of like, well, what does this mean in terms of the token price? Like, how does this work in terms of the tokenomics? There are, maybe 1 in 100 people in crypto or DeFi are actually thinking about like, have actually internalized what business fundamentals actually, are. That's starting to change. And I think things like revenue buybacks, like these things that are now starting to become a bit of a meta, and I think will accelerate, will over time act like a force of gravity on on the ecosystem, where anything that just doesn't have anything that does have it, and these are healthy businesses that are actually generating legitimate revenues, meaning not machine gunning tokens out the one side and then claiming some fraction of that as revenue on the other side, but I mean actual like legitimate businesses with gross margins and positive unit economics. These tokens are just going to, over a period of years, dramatically outperform anything else. But it's my unfortunate take is I think we're talking about years here. I think it's going to take a long time for people to rewire the way they approach these things. But I mean, on the positive side, certainly the ATs and everything else and the whole stablecoin mania right now is bringing so much capital to work that that's just going to lead to a lot of innovation, lots of really cool projects having good runs as a result of it.
There's one thing we talk about on the venture side, which I've said on a bunch of podcasts over the years, but maybe in this context that Mike's talking about is worth reiterating, which is there is this propensity for humans to really overestimate what's possible in the short term and underestimate what's possible in the long term. And it's a side effect of how exponential growth works. Like our brains are not really wired for exponential growth. And so in the early days, when it is exponential, it's sort of sublinear. And at a certain point, it becomes like truly, truly crazy exponential, but we still think linearly. And so you get this effect where you like overestimate what's going to happen in the short term, but underestimate what's going to happen in the long term. And I think that's likely the case here with all of this DeFi stuff, which I agree with Mike. There's a lot of sort of Ponzi-nomics happening and the tokens are not sustainable. But really, like, when we underwrite an investment, we build these spreadsheet models and we're like, well, what do you have to believe about an EtherFi? Or what do you have to believe about an Aave? Or what do you have to believe about, some of these protocols that actually are durable. They're building something real. And you don't have to believe crazy things from like a cash flow and revenue perspective over 10 years to end up with like really interesting outcomes. It's just that you might be overpaying for 2 or 3 years, right? Or you might get punched in the face with the volatility for 3 or 4 or 5 years. But I think it's sort of like the market manifestation of this psychological phenomenon, which people really overestimate what's possible in the short term and really underestimate what's possible in the long term. And if you have the right time preference, you can essentially take advantage of that. Like if you're willing to be patient for 7 to 10 years and bet on the right things, that's why like long-term investing can really work, because the human psychology sort of prevents people from being able to do that most of the time.
Yeah. So Avi, just to follow up on that, then when you're looking at the landscape of DeFi, of the applications and of the tokens associated with them, is there a thought process that you're having or a mental model right now for, okay, institutional adoption is happening. Besant is saying $3 trillion worth of stablecoins by 2028.
Yeah.
The DATs are buying, IPOs are happening, all the kind of initial context. Are you looking at the application landscape today, like EtherFi, like others, and formulating theses around these tokens such that you want to be owning the direct tokens, which are going to be have their protocols be exposed to this institutional wave the most? Like, how are you selecting these assets to hold and be kind of a part of long term?
Yeah, it's an excellent question. It's a lot of what we do is trying to figure out how to figure out what's real. And by the way, nothing I say here is financial advice. Just you should never ever listen to me about anything, frankly.
Yeah, it's not like you created Google Maps or anything.
So yeah, just trust me. Don't listen to anything I say. And if you disagree with that statement, go talk to my wife. So you know, the way we think about it is basically, is there a real fundamental human need that's being solved? And a lot of times you can kind of distill that down into a verb, right? And so if there's like a verb and the thing becomes synonymous with a verb, then probably there's like some human need that's being met. And so ave is lend, right? It's just like lending is a thing that humans need to do. I have assets, I need to borrow against them. You have money, like give me money and let me do something productive with my money. Trade is another one, right? And then you sort of zoom into that and you say, well, what are people trading? And you say, well, stable coins are a thing, to your point. And so how do stable coins move around? And what's the most efficient way for stable coins to move around? And so we kind of take it's almost like an ADIQ approach to it, which is like, what are like the really base things that people really need to do? And what are the things that they need to trade? And what are the things that are actually productive? And is there something actually productive happening underneath it? Right? Because if there's nothing fundamentally productive happening, then it is just a Ponzi flywheel and the token will implode. But if there's some fundamental new value getting created, like somebody can take those assets and do something productive with them, then it's interesting. And you know, today I think there definitely are some things like that. I mean, I think EtherFi falls into this. I think Aave falls into this. I think you could look at, you know, setting aside, again, this is a separate question than the tokenomics, right? Is the first question is, well, is it actually even useful? Like great tokenomics don't bail you out of the thing not being useful. But you know, something like Uniswap or Curve, right? Like there are real things happening. Fluid, right? These are like real innovations. They're really interesting things that are happening where people need to trade them, and you can look at the volume being real, right? It's hard when there are real fees being taken to manufacture volume, because why would somebody burn a lot of money? You know, if there's actual fees being taken, again, the tokenomics enter here, right? If there's some sort of token emission that's subsidizing it, but that's where we start. It's just like, is there a fundamental thing here? And does the basic spreadsheet model get you to some sort of outcome where you can say, oh yeah, like once the market is fundamentally driven and rational, and that might take 5 or 10 years, but once the market is sort of rational in that way, which of these things are a really good buy? And I think if you think this way, which is really hard because you have to be willing to like suffer pretty big drawdowns along the way, this is what would lead you to, for example, invest in Facebook when it goes public, or this would lead you to invest in Amazon when it goes public, or Google, right? It's like you can look at the fundamentals of the thing and be like, okay, in the short term, people might overprice this or underprice this. But if you just look at the growth rates, you look at the network effects, you look at the real utility of the thing, and then you say, does that compound for 10 years? You can end up in a pretty good place. It's hard to do that though. It's you know, if it were easy, then everybody would be rich, right? So it's really, really hard to do that. But that's how we think about it, at least.
Well, Mike, everybody needs to save money and everybody needs to spend money. EtherFi has been obviously crushing those two components.
Two great verbs, right?
Yeah,
like
exactly.
Save and spend. This is like, these are massive verbs in the world.
Yeah, seriously. Yeah, Mike.
Yeah, for sure. No, I mean, I think I'm more excited about what we're building than I ever have. I think, you know, when we started out, and maybe I'll make a small point. You know, we started obviously with the staking product that a lot of people, you know us for, but this vision of creating the, you know, crypto native neobank or crypto native banking alternative was actually there. I mean, from 2 years ago when we first raised our Series A. I mean, we have a slide on it that somehow all of our investors, all 130 of them, have kind of amnesia. I think they saw it at one point, but it was such a ridiculous thing to say, I think 2.5 years ago, that like they were like, yeah, keep going with the staking thing. We don't care about anything else. But I think what we built is like, I mean, it's just legitimate. It's legitimately better than anything else that's out there. The example I like to give is that if we were a financial institution with 12 billion in assets and the kinds of volumes that we're doing, we'd need to have probably 4 or 5, maybe even 600 employees. Today, EtherFi has 30 employees, and so operating this kind of DeFi bank, as we call it, this crypto native alternative to a bank that gives you all the same services, is just over an order of magnitude cheaper than operating a similar kind of financial institution. And the reason for that is there's a multitude of reasons for it, but one, because we're non-custodial, the regulatory burden that we fall under is just substantially lower. It means we can just operate. We don't need to get banking licenses in 100 different countries. Second of all, we actually get a lot of stuff for free from the blockchain that other fintechs would have to build out. I mean, you'd have massive ops teams, much larger compliance teams. So it ends up being way cheaper to operate. And what that means is we can just give way more rewards to our users. So that's why we can give 3% cash back on the card. We can give much higher reward rates on people's savings and assets, and of course it's plugged into DeFi, and so you just get all these like really interesting opportunities that you wouldn't get anywhere. And so it's been huge. I mean, we're already just 3 months out from launching specifically our card program. I mean, we're by far in a way the largest on-chain card. I think we're like 3 times larger than the next one after us, but we're actually already larger than some of the exchange cards, for example, some of the CeFi crypto cards. I think we'll be the largest within a couple of months. I mean, at the rate that we're growing. These days, we're doing over 1 million a day in transaction volume, which in crypto land payments, that's actually substantial. I mean, it doesn't really get interesting until we're about 100x that size. We need to be doing, I think, 5-10 billion a year before you can sort of really like credibly say you're a viable platform. But I mean, I think we'll get there, and I'm more confident of that than I ever have been. And I think that will be a demonstration, hopefully, among other things, that you can actually build really dramatically like powerful, durable businesses in crypto that you cannot do in TradFi. It's just physically impossible to build something like this in TradFi.
Yeah, Avi, I'm curious from the kind of investment perspective on this neobank concept, what you see is like how big could this get, right? Plasma just came out yesterday with or 2 days ago with their mainnet. This will come out next week, so it'll be kind of like last week. They announced a card and a neobank. Obviously, EtherFi has other competitors, but like the pie of the crypto users is like the main pie that everyone wants to get now because they're wealthy. But the real pie is like far larger than that. It's the whole world's population, basically. Avi, what is how big do you think this could get from the investment perspective, and what made the timeline look like to achieve a larger outcome here, whether it be actual like the process or kind of how you think it might play out over like a chronological timeline?
Yeah. So actually, there's an interesting statement that you made there about, do you actually need to go to the rest of the world? And I think there's actually an argument that you don't. And the argument that you don't is that what you have, if you play this right, is the emergence of an entirely new capital base. So just to put some numbers against it, right? Like you look at Bitcoin today, you look at Ethereum today, you look at the stablecoin sort of dollar on-chain numbers today. And I think all of these numbers go up by like 10x. Like I think you go from 250 billion in stables to 2.5 trillion in stables. And I think those people are effectively crypto native. They could be all over the world, but sort of their first real exposure to any sort of financial services is likely a crypto wallet. If you look at just Bitcoin and ETH for a second, you could roll Solana in here, you could roll some of these other chains in here, but let's just look at those two for a second. And you kind of do the back of the envelope math. You're like, well, how many Bitcoin wallets have something like 1,000 BTC in them? And how many ETH wallets have, let's say on the order of, $50 million worth of ETH or $25 million of ETH, pick a number. And then you start applying forward multiples to these things. You're like, look, could Bitcoin get to $1 million if it's as big as gold? And could it get to a couple $1 million? I think it could be bigger than gold because now it's gold on a phone. Could ETH be at least as big as silver? Could it get to gold? I actually think ETH, there's an argument that's better than gold, right? It's like for all the same reasons Bitcoin is better than gold. And these markets tend not to be like one person just wins, right? It's like there's Uber, but there's also Didi. There's also, right, you have, Grab. There's like these pretty big markets. So if you run the back of the envelope math on how many wallets have, let's say, more than 1,000 BTC, how many wallets have more than $25 million of ETH, and you put these forward multiples on it, what all of a sudden you realize is there's something like 5,000 to 10,000 such wallets that you can find. And if you get to those numbers, you have 5,000 to 10,000 new billionaires that were created entirely because of ETH and Bitcoin over the next decade. There's only 5,000 billionaires in the world, right? So that means like half the world's billionaires are crypto native billionaires in a decade, which is a really wild thing. I don't think people have processed this. This is like a tremendous upheaval in the power structure of society that like half the world's billionaires are because of one asset class. And this has downstream knock-on effects on everything, on, you know, politics, on governance, on, you know, family offices, like how the money flows of the world work. Like it has some pretty big consequences. So I think you just look at that and you say, okay, well, that's just the billionaires. That doesn't even count like all of the rest of the tail, right? Like how many new millionaires do you end up with? So I think there's an argument actually that this like capital market that's going to have several $trillion of dollars in it and potentially 20 to 50 $trillion of new wealth that's been created through the appreciation of the underlying assets, that in and of itself might be a large enough capital market that you never have to go, quote unquote, back to the real world. The analogy here would be, if you look at the internet, there was an argument that people used to make like 15 years about the internet of like, oh, like you get started on the internet and then you go mainstream, right? You get a TV show, you get a book, you get a movie deal. And actually what happened was the opposite, right? Like the internet just ate everything. And so the way it works now is you if you're a comedian, you want to get a Netflix deal, right? Or like you go big on YouTube and then you just monetize your own fan base. Like you don't get a TV show now. Like the world's biggest celebrities are, you know, like Mr. Beast and iShowSpeed, and it's like Twitch and YouTube, right? And TikTok. And so I think the same thing happens with crypto. Actually, like the real market isn't that like, you know, the real world somehow shows up. I think what actually happens is crypto eats the rest of the world. And then everybody that actually has money is a crypto native.
Alrighty, guys. That was the excerpt with our lovely friends Avi and Mike from Electric Capital and from EtherFi. They are some of the original people who have brought the well, Avi actually kind of invented Google Maps a bit, which I think was cool. And yeah, so I was pretty stoked on hearing them. And yeah, I think there's a bit of latency. I think my computer is just kind of getting fried right now, guys. So bear with me here. Leo, how bad is that? Okay. Cool. Alrighty. All right. Yeah, we're going to go ahead and pull up our lovely friends at Yahoo Finance and jump on there. I'm going to come back and we will await our next guests.
President Trump will meet with the top 4 congressional leaders at the White House later today as a potential government shutdown looms. The bill
government shutdown.
The government until mid-November and must
no fucking way.
Democrats are
this is like one of those things where it's like, oh, it's a government shutdown. It's like, oh, well, what does that mean? It's like, oh, all the people that work in the White House don't go to work for a day. It's like, they're not, like this isn't a real government shutdown. Like, what are we saying here, guys?
Can happen after averting a shutdown. Now, these Republicans will need at least 7 Democrats to back the short-term bill in the Senate, which has already passed the House. Yesterday, Trump again threatened mass firings of federal workers if the government
pretty good.
But what exactly?
Wow, this is really freaking weird. Shutdown looming. What is the odds on this shutdown?
Partial government shutdown is just days away.
Days away from a government shutdown, whatever that means. Government shutdown on Wednesday. Kalshi has it at 68% chance of a government shutdown on Wednesday. Wow. So Kalshi has $1.2 million worth of volume on this market so far. Excuse me. About 2 weeks ago, it started off at 40%, and now it's all the way up at 68% on Kalshi for a government shutdown on Wednesday.
Non-essential services
wow.
National parks will
what the
close.
Fuck?
In the past, some parks were kept open with state health.
Yeah, we're gonna have to clip that one. That's crazy.
Leading to reports of damages and
that's wild. Alrighty, guys, we got our boy Tristan in the back. It is the Perps Dex meta of this freaking. It feels like 2021 again somehow. And yeah, we're gonna get him up. I'm gonna press pause on my lovely Yahoo Finance lady who I've been talking to today as a weird man who is talking to people who can't hear me. Awesome Beverly Hills cop background music. Thank you, New Type. TSA workers won't get paid. Airports will back up for sure. That's crazy. Dang, that's high. That is high. I did not expect it to be that high myself. So yeah, I love prediction markets have the actual freaking odds of just everything that you want to bet on under the moon. So guys, up next we've got Tristan of Bullet. Like I said, we're gonna talk perps, we're gonna talk Bullet, we're gonna talk what's going on over there. And yeah, let's get him in. I think he's calling in. I don't know if he's in Singapore or not, but we're about to find out. So let's get Tristan up on the stage and let's have a session. Here we go, guys. Welcome back to Rollup TV. We have spent the entire weekend building out the back end, allowing us to comment on news, on Apple TV, on all this stuff. We are embedding prediction markets soon, and the show is really evolving. So, Leo, let's get Tristan up on stage. My boy, Tristan, good to have you, brother.
Yeah, great to be back, Andy. It's always a pleasure.
Yeah, man. I mean, we chatted last time. I think you were up in New York City at that event. And right. We had just been talking generally about what you're up to with Bullet. So it's probably been 4 months from there. What's the latest, man? Give us the rundown.
Yeah, tons have been happening. I guess we were still very much in like building mode at that kind of time. Things were coming to market. And now is obviously a very exciting time where perps are out in the current meta. I think it's kind of the thing that's top of mind for everyone. Everyone's talking about perps dexes. Everyone is launching one, it seems like, at this point. Thankfully, we've been building ours for quite a bit of time, but it's almost ready to unveil to the public. So we were kind of like just getting onto testnet at that point. I think things were in the pretty early days, still finding a bunch of rough edges, still kind of improving things. And I'm kind of pretty excited to say we're basically what should be, weeks, not months from mainnet, essentially. Like the finish line, or I guess like the light at the end of the tunnel feels like it's there. There's obviously going to be a lot more work past that, but it feels like the product that we're bringing to market with the Sovereign stack, with Celestia underneath, these kind of things are going to be very, very exciting for people wanting to trade perps. And we're hoping to get out there with a very compelling offering in that Solana perps vertical.
Yeah, man. I mean, look, Solana has been lacking in the perp side, and people have been giving them a lot of flack for it, saying that Hyperliquid's going to come and take their lunch. I think Bulk Trade just launched as well, or at least raised and kind of brought their brand to market. They're not going to be able to compete with you guys in the immediate term because you guys are about to be live. And so you guys will be the primary, from my perspective, you've been very aligned with the Solana community for years. They really like you guys. To me, you guys are basically the Solana perp dex going forward. I know Drift exists, but I think that you guys will be able to outcompete a lot of the current ones on the main chain because of your architecture, which I want to talk about in a second. I don't want to front run any of the news. Maybe we can just talk about Aster for a second and Hyperliquid. So you're sitting there from your lens of being a perp dex builder, obviously, and getting ready to ship, and you just see this unfold over the last couple of days, or the last 2 weeks. What is your reaction? Like, what is the hell is going on? You can get into some of the details of like Hyperliquid listing Aster and the Aster UX being broken, and then lighter volume going way up, and then them flipping Hyperliquid in volume. People are saying that there's no moat. Like, what is your reaction to what just happened in the perp dex landscape?
Yeah, it's insane, but this is like crypto at its core. I think markets move very quickly, and this is kind of what I've always had in the back of my mind. Like, we've been pretty locked in this year building, and no one pays attention when it's like the bear market and things are kind of moving slowly and people are concentrating on AI or whatever might be the hot thing. But ourselves, many of the other teams have kind of been building throughout the last couple of years, and things kind of finally come to fruition. And when things pop off, they pop off pretty hard. To kind of dial it back, we had very similar experience. We built through the bear market, Solana at $8. We built through the time of having basically a couple of hundred diehard users back on the chain and trading on our DEX. And then last year when Solana went absolutely ham in terms of all the people kind of bridging into Solana, using all the different apps, I was just literally up at 2 a.m. one night, I think after the Jito airdrop, where I got, pretty good airdrop myself. And I was just looking at the wealth effect that was happening, people rolling that back into Solana DeFi and watching the kind of number of users on our DEX just skyrocketing through the roof. Unfortunately, we did our matching engine did kind of halt because we just had so much usage that night, and I had to go and quickly deploy a fix. But it was kind of a thrilling, exciting moment, staying up all night and basically fixing and kind of keeping everything together. But the fact that we'd been kind of working on it for a bunch of time actually meant that we kind of could scale it to what was basically 100,000 users over that month. To kind of dial it back to the current meta, yeah, it's been nuts to see. We've been trying to push really hard to get live as quick as possible, and obviously building a first of its kind DEX of this kind of sovereign rollup model is very difficult and very challenging. It's a new thing, but it's great to see. I think we always see these narratives rotate in and out, and sometimes there's some vaporware or things that it's hard to really attach real value to it. But I think it's really cool with with perps at least. Like this is a real DeFi use case. Trading always, I feel like crypto comes back to it at the end of the day. That's what people love to do. And it's great to see, like, I think the space has just exploded so much. Like you look at perps volumes a couple of years ago, DYDX was maybe doing a couple of 100 mil volume a day. Now you have, every DEX out there doing hundreds of millions, Asta getting up to even like 50 billion. How much of that is like real volume is like questionable, but I think it's really cool that the big CeFi players recognize that DeFi is the future. They should be building DEXs, maybe things could be more decentralized on their end, but it's good that everyone is kind of like throwing their hat in the ring, trying to get in there. There's like a lot of competition, obviously, but I think that's an exciting thing to be a perps builder at the moment. I would rather there's a lot of users and a lot of volume than no one paying attention to the space. So yeah, things just have gone insane and like absolutely ballistic over the last couple of weeks. So yeah, I've just been like working super hard. I was at KBW just recently, but it was like a lot of late nights of like coming back to the hotel room, pumping out more stuff, a lot of like really good, exciting meetings. Like people are very hyped about this space and you don't have to like pitch perps to them. It's just like the thing that's top of their mind. And everyone's just looking at these forerunner players as well as, I guess, folks like ourselves who are soon to come to market. I think it's really exciting. And I think there's a big TAM and a big opportunity out there to grasp.
Yeah, man. So curious, like, what do you think is the staying power of something like Aster, for example, or some of these newer ones like Justin Sun's son? Like, do you think that these are all just primarily TGE farms and airdrop farms, and then after volume was going to decrease significantly and consolidate? Generally, like, I think this space is likely a multiple winners take all kind of situation, or like an 80-20 thing where a couple teams take a lot of the volume and like the rest are fighting for the scraps. Curious if you align with that perspective, and if you do, how do you ensure that Bullet is one of the ones winning and not just fighting for the scraps?
Very good question. So yeah, I largely agree with you. I don't think it's going to be a winner takes all. I think it's probably a winner takes most, or there's going to be a few winners. This is kind of what we've seen pan out in the centralized exchange space. Like Binance still obviously like a behemoth when it comes to centralized exchange trading, but there's a bunch of other very, very successful multi-billion-dollar businesses being built there, and things always change. I came into crypto in 2017 when Bitfinex and Bittrex and all these other guys were kind of the bee's knees. I traded a lot on FTX back in the day, and the kind of pole positions seem to change every couple of years. So I think it's kind of, with most crypto things, a survival game. You have to kind of be long-term oriented. You have to go through the bull and the bear cycles. So specifically on Aster, obviously, I feel like they have pretty big backing in terms of CT's #1 KOL, really putting his name behind everything in CZ. And that's been really good for them. A lot of attention. People know that this thing is probably going to stick around for a bit and going to have a lot of backing behind it, a lot of attention, a lot of hype. Having talked to a lot of, I guess, big traders, whales, people who are in the know, I guess, during KBW, I think generally the expectation is we're probably not going to see it flip hype. I think hype is like kind of really reached that escape velocity, has this passionate community, but obviously Aster is definitely like pretty sound competition for it at the moment. It has done very well in terms of the wealth effects. I think if you talk to most people who actually trade on the platform, I think the platform leaves a lot to be desired in terms of not sure if the liquidity is particularly real. The kind of UX of a lot of the trading stuff, I think, could be improved, and the team probably will be improving that over the coming months. So as with most things, things take a while to get to the scale that they need to get to. I've been building a perps exchange for 4 years. We've been through the ups and the downs. Things take like a lot of time to build up the right liquidity. The UX in terms of like getting a lot of user feedback, and even Hyperliquid, I think, has had its own share of downtime and like small hiccups along the way. To be fair, like they've done an incredibly good job, but these things are not built overnight. They take many, many years. And specifically, I guess, around Bullet, yeah, it's something that we've taken quite a bit of time to build. Specifically, we've been building Bullet for the last year, but running it, managing risk. We've never blown up the exchange, touch wood. We've been pretty safe about the things that we've done. And so we take a more long-term oriented approach. There's going to be a bit of a flash in the pan with like craziness of points farming and people listing all new markets and everything coming to market. But I think we've got to zoom out and think there's a bigger picture here. There's a lot of like CeFi market share to capture. Also, a lot of traditional finance players are also getting into the game. We're seeing institutionalization of crypto. Big players like Robinhood, who are kind of known for options trading and now doing perps. I think it's just a really big market. And then specifically on Bullet, yeah, I think we have really good technical edge. We're not like a copy paste fork of some other protocol out there. We haven't just whipped this up in 2 months. Like this has been built, I guess, on the Sovereign Labs team. These guys have been building rollups for years. We've been building perps exchanges for years. So, you know, this is kind of the nexus of everything coming together. We've talked a lot to market makers to really improve, iterate the product to have the best liquidity possible. Our other value prop is we've gotten things extremely fast. There's no blockchain out there at the moment that can execute trades within 1 millisecond, but that's literally what we've achieved as of like 2 weeks ago.
Beautiful.
And yeah, just trying to bring that all together. I think it's going to be hopefully what is a best-in-class perps product.
Boom. We have a huge announcement today from the Bullet team. Give you some confetti. Congratulations, man. Give you some money rain. Big day for the lads. Bullet is upgrading to Celestia underneath. Clobs on blobs. With Celestia, Bullet traders can count on seamless scalability. There's a Blockworks article that has just gone out. The Solana L2 Bullet is tapping Celestia for DA. The team announced today at Token 2049 Singapore. So you guys are building on Celestia. You're building a Solana L2 on Celestia. That is trippy, and people are stoked on it. Why did you guys choose Celestia, and how is this going to help you towards your goal to compete with centralized exchange perps?
Yeah, really good question. So Celestia is obviously well known in the data availability space. They're kind of one of the big proponents of modular roadmap and kind of really powering a lot of the top rollups that you would see out there. They obviously integrate very nicely with the Sovereign stack, which we're built on top of. So we've been kind of looking at their solution for quite a bit of time. You know, in the early days, we built out a pure Solana like DA adapter. That's something that we spent months of time and like a lot of, you know, money and engineering effort on building, and it kind of worked. But we were kind of getting to about 500 TPS, I think, which is reasonably good. But I guess Solana itself is not highly optimized for, you know, storage of raw blobs and you know, for that kind of roll-up use case. So we still want to tap into Solana in terms of letting traders kind of onboard there very quickly, using Solana's decentralized validator set for a bunch of the, you know, settlement of the roll-up. But then in terms of DA, we really see the benchmark as like, what are these other, you know, top, you know, best-in-class perps exchanges doing? We kind of look at Hyperliquid, for example, doing 5,000 orders per second, you know, on average, and doing up to 200,000. And if we want to get up to those levels, we really need to scale DA. DA was like by far our biggest bottleneck. And the really cool thing is Celestia guys shipping a lot of really cool tech. You know, they've obviously got the Mamo testnet and going to be upgrading that, you know, getting that into production pretty soon. So, you know, you'll be pushing many megabytes per second through the network. And I think perps, especially what we're building, is a great use case for that. It's something we've been talking to them for a while, and I think they're very excited to have us on board working with them, because perps, you're literally executing thousands, potentially tens of thousands of orders. You know, that can take up a ton of bandwidth on Celestia, which is really good, using up that kind of block space and driving a bunch of demand for that. And it's obviously great, you know, running a kind of globally available, you know, decentralized exchange. I think it's just going to be very hungry for data. And so being able to scale more and get to those centralized exchange levels or compete with Hyperliquid in terms of that throughput is going to be very important. And, you know, that's kind of always been the roadmap of, you know, increased throughput, decreased latency, essentially, that we've been trying to push for. So now that we've got this 1 millisecond trade latency, and now that we're able to scale DA bandwidth to thousands or tens of thousands of transactions per second, that's kind of fulfilling both the check boxes in terms of our scalability and optimization roadmap.
Beautiful. Yeah, and I know the Sovereign Labs team has just a ton of really great tech, very like custom built stack that has kind of gone underappreciated so far, but I think Bullet will pretty much be the poster child for Sovereign's abilities. So no pressure, man. Don't let Jem down. And Jem, if you're listening, man, congrats. I know that you've been building hard to get this out. Tristan, talk to us about the idea of kind of getting the perps exchange that you have to a point where you are doing billions of dollars a day in volume, pushing gigabytes, you know, of data to Celestia on a daily basis, and Celestia allowing that to happen. What is the 10x here? What is Bullet's 10x to become one of the leading top 3, top 5 perps exchanges? How will you get there?
Yeah, really good question. So I think already the technology is in a pretty good spot. So like I said, we literally got a technical 10x over the last couple of weeks. I wrote a good kind of Twitter post on that. We were running at like 10 milliseconds to execute a trade before, which was already, I think, faster than most blockchains that you'd see out there, 7 times faster than Hyperliquid, roughly on par, I guess, with what Mega ETH is quoting. And we did a bunch of optimizations, working obviously with Preston, CTO of Sovereign Labs, to find out how we could optimize some of our state access, a bit of nerdy stuff that always like reading from the Merkle, database is really expensive. We figured out some ways to improve that, to make that more efficient for our exchange, because some of these kind of market maker accounts or like big programmatic traders will have thousands of orders and stuff can get really expensive. So we've really streamlined a lot of that for that use case, which I guess Sovereign was not necessarily optimized for in the early days, but we've helped guide them and got to a place where that's really good. And yeah, we did all these code optimizations and got some like huge breakthroughs, literally just like dropped our latency by 90% down to 1 millisecond. So that was like a straightaway 10x that we achieved in like 2 weeks. And then in terms of like the go to market, getting out there, I think the tech's going to be really good. Like I mentioned, our throughput's going to be really good. Our latency is going to be really good. Why does that matter? Because we need to grow to a big user base. This is kind of the limitation that we had building on a general purpose L1. It was good in that we did up to $15 billion worth of trading volume there. We were getting hundreds of millions of dollars of trading volume a day, but trying to scale past that to billions of dollars that all these platforms are doing really requires like some 0 to 1 innovation. And we're not going to just do that off chain like a bunch of these other guys are doing. We're doing this fully on chain. We're doing this fully verifiable. That's why we've written the thing with Rust from the ground up, all ZK provable. And so that's like the tech side. We think we can get the scalability basically of a centralized exchange, but have it 100% verifiable, which I think is just like a very big improvement over what we've had in the past couple of years with like centralized crypto finance. And we're finally starting to get into this meta where performance really matters, and that's a non-negotiable and just becomes table stakes. And then a lot of it is just like working with partners. Obviously, liquidity is like really the thing that we're trying to optimize and why we built this thing from the ground up. There is a bit of like a MEV toxic flow problem that happens when you're building on these general purpose chains, happens on Ethereum, happens on Solana. Essentially, it's very hard to provide robust liquidity and be profitable as a market maker. So the way that we've done our kind of very fast FIFO ordering, cancel prioritization through the sequencer, bunch of other innovations, with like improving, API, DevX and all this kind of stuff. We've really made it catered to these professional market makers to provide very tight spreads for retail. So once you've solved that liquidity side and we've onboarded a bunch of people there, then I think it's a matter of going out to retail traders, having very good liquidity, having a very good UI that's snappy and performant and people love to trade on, that's got all their nice little chart features and other kind of indicators that they love to use. And then providing like really good capital efficiency to traders as well. We have a very innovative cross-margin system and multi-asset collateral system. No other club perps platform really has this as far as I'm aware. So this means that most platforms you trade on, Hyperliquid and a bunch of other platforms, only let you margin in USDC. But we had a lot of requests on our previous platform to margin in Bitcoin, Sol, ETH, whatever it might be, to bring that into the platform. So we've built something that kind of rivals, I guess, what you'd see on like a Bybit or a Binance in terms of their margin engine, but putting that essentially on chain. And I think that we're starting to get to something that is like leading centralized exchange performance, very sophisticated margin engine, good leverage that we can add in there. Hopefully we're trying to like deliver 100x leverage on some pairs in like smaller size. And then just kind of bringing that experience with fast listings, with a really kick-ass referral system, and really hoping that we can kind of snowball that and grow that by really focusing on Solana traders, people in the trenches, people who trade like significant volume on existing perps exchanges, and trying to win them over with, I guess, the good liquidity, the fast execution, and the superior UX that's going to be on Bullet.
Yeah, it's beautiful, man. I really appreciate the in-depth response. And I think the only thing that was missing from your answer is probably what the people want to hear about the most, which is around the entire like revenue and buyback situation of these perp stacks. As they generate a ton of revenue, billions of dollars a day is possible in terms of, millions of dollars a day is possible in the immediate term if you can scale this up to where you just said that you think you can take it and where you want to go. People want to understand what is the Bullet token scenario here. I know that that there's already a token live. What is the plan for the Bullet token? What is the plan to create a sustainable flywheel based on the success of your project?
Yeah, great question. This is very important to us, and I think building that flywheel is just like paramount to the success. And I think that's what's very interesting about, on-chain DeFi as opposed to, like traditional businesses, is there is this token component, and there's a way to have people as like stakeholders of the platform and be aligned with like the long-term success of the platform. I think we've obviously seen this with Hype, and some other platforms have done like really well. So kind of like taking notes from that, I think it's very important to be aligned with our community. So giving really good utility to the token in terms of like, usage for trading fee discounts, other kind of benefits on the platform. But then probably more importantly, something that we'll put up to a vote to community is essentially like, how does value accrual work for the platform? How do we kind of work with the revenues of the platform and use that to kind of like bootstrap and grow the success of the exchange? And so we have, pretty interesting plans. I don't want to share the exact specifics, but there will hopefully be pretty significant reinvestment, I guess, into the platform, to really grow. And we want to essentially, we're more interested in, I think, growing the platform long term. We want to reinvest into R&D and into growth, to making this thing very successful, to building up the community. Our point is not to like go and just like have all these fees. Like the thing is like, we should grow the pie. We should make this bigger for everyone else. And starting that flywheel of like, come trade on Bullet, essentially like earn a bunch of rewards, reinvest those rewards, stake them, earn more on that, come back and trade even more on the platform, have even more discounts. You start this virtuous flywheel where people benefit from that and feel like they have some loyalty and really want to stay in the platform. I think that's what we're trying to build long term. And so, yeah, just like moving everything in that direction, being really aggressive, I think in terms of that, I think will win us a lot of interest and a lot of like passionate users. And I think if we can complement that with like a really, really solid product experience that's sticky and that people want to continue trading on, I think that's kind of like the best of both worlds.
Man, I see MetaMask has announced a perps platform today. I don't know if they're going to use Hyperliquid or use somebody else's backend, but the space is getting competitive. It's getting hot. Tristan, I got some questions from the audience here. First one is, will there be a meme coin launchpad on Bullet?
I think in the early days, it's probably something we'll like leave off for a little bit later. But the good thing is, I will mention, when we do not only do perps, we also do lending and we also do spot. This is kind of the magic behind our margin system, essentially, and what makes it so good. You can deposit most kind of major spot assets in there. You can use them as margin. You can also trade them on the spot market. So this is something that a lot of these perps dexes don't have, or kind of shipped a long time after mainnet. We'll have it live day zero. We're also shipping isolated margin to be able to launch more of these kind of lower cap, slightly riskier projects without creating systemic risk for the rest of the platform. We want to do this in a safe manner. And I think, especially being a Solana, focused project, I think meme coins are such a big part of the Solana DNA at this point with, Pump Fun and all that's been happening there. So part of our GTM is really, we want to list a bunch of Solana native assets. Obviously, Solana will continue to be the place where a lot of these new meme coins get launched. Being able to provide perps or spot for those assets very quickly after launch for people, I think is definitely going to be extremely interesting and something we want to invest time into.
Yeah, I think that's what some of the best perp dexes in the world do, is they are quick to launch new assets, which I think is really, really crucial. So I agree on that. I also agree that it's probably not the immediate priority as far as that goes. New Type has a question. Checking bias at the door. What, in your opinion, is the biggest competitor for speed and performance? Super centralized sequencer L2 rollup, or will Solana be the kingmaker after Alpenglow goes live?
Yeah, great question. I mean, we'll have to see. I probably don't have like the full scope of the picture. I don't think Alpenglow actually necessarily fixes this. It gets us down to maybe like 150 milliseconds on Solana in terms of the latency. But I think when you're talking about centralized exchanges, you really need to be under 10 milliseconds, in my opinion, to be competitive with Binance. We got another order of magnitude to go. Fundamentally, I think what is being solved on the L1 is like very different type of exchange, which is globally decentralized. And I think we'll have a different set of trade-offs to what we're building. So I think it's fundamentally a different product and a different space that we're competing in. So I think if you're to use a platform like Drift that claims to be much more decentralized and run on these different validators, you are going to be trading off some slippage, obviously, like worse liquidity, worse execution, a bunch of other stuff. But some people will be willing to make that trade-off. I think what we're laser focused on is obviously more of this professional trader audience, these like very high speed central limit order book exchanges. Obviously, CeFi kind of the kings of that. Binance has 250 million users. Very few of those are actually trading in DeFi. I don't imagine Hyperliquid has more than a couple of 100,000. users. And like DeFi in general, I think just very, very small pie that we need to tap into. But I think immediate, competitors, obviously the guys on top of the leaderboard doing all the volume and all the open interest, like very interesting. I think like the dark horse over the last couple of months has been Lighter. Very cool to see their team do very well. They're obviously building a rollup based model as well as a ZK rollup on Ethereum. So they've taken very similar philosophy to us, I think, in terms of having this sequencer model, being able to execute transactions very quickly and provide, hopefully like a very low latency experience for certain traders. They've made also some very interesting decisions in terms of their feed model and basically doing zero fees. So we're seeing that obviously getting a lot of volume for them. Whether that's like a sustainable model long term, remains to be seen. But yeah, I think those are some of like the players that we're definitely keeping an eye on right now.
Yeah, I appreciate that. I think it's like the perp stack version of the modular versus monolithic debate, essentially, and kind of seeing how that plays out. So, Tristan, congratulations, man. Huge day for you. And, I appreciate you spending some time here with us. Congrats on mainnet, congrats on this announcement going on mainnet very, very soon. And yeah, man, it's going to be a journey. This is just a new day one. So thanks for coming on.
That's right. Very, very excited. Thanks for having me on, Andy. Really appreciate it.
All right, Tristan, get some rest, man. I know it's been busy.
Thank you.
Peace. All righty, guys. Shout out to the Celestia team. Shout out to Bullet. Shout out to Sovereign Labs for getting a big one in. These perp dexes will drive a ton of volume and a ton of demand for DA on DA layers like Celestia and others. And these will probably be the main guzzlers of gas on these platforms. So if you like gas guzzling, you know where to go. Go get yourself a perp stacks, throw it on a high performant DA layer, call it a day. Guys, up next, we've got Red from IP World. There has been a wild shabacle of things that have happened in the IP space with Origin Summit in Korea last week. I'm going to figure out what the hell happened. There's a lot of fun on the timeline. There's a lot of question marks about what happened, who started what, who rugged who. I don't really know. I barely even checked in. But I do know that Red from IP World has a stance, and I think we need to hear Red's stance out. So that's what we're going to do. And yeah, guys, it's noon. Florida, beautiful day. Market's green. Happy Monday. And yeah, we're going to get Red up and we're going to get right into it. We're going to find out his side of the story, what's going on. Red, welcome to the show.
Good to be back.
Good to see you, brother. I think you just talked to Robbie like a week ago.
Yep. Just a few days ago.
Well, a lot has happened in the last couple of days, Red.
Yep.
I'm going to allow you kind of just like opening remarks, set the stage, and give us some context here for what transpired over the last week or so, starting before Origin Summit and leading in through and then after. What happened?
Yep. So as everyone knows, we had an official signed term sheet with one of Pinkfong's official licensees called BBF to launch a token for Pinkfong's mascot. That's what everything pre-KBW was marketing around. An official signed term sheet with one of their official licensees with direct endorsements with Pinkfong's co-founder. And if you were at KBW, you will also know that he was publicly endorsing our launch at the stage, coinciding with the actual token launch. So basically, pre-token launch, everything was vetted from our side with approval from multiple licensing parties within Pinkfong, but most importantly, with direct endorsement from the co-founder himself. And so what happened after KBW is less than 24 hours, right before the official IP claim on our platform, a cease and desist kind of came out of Pinkfong's side, prompted by one of the other official licensees of Pinkfong. And Ryan, the co-founder, proceeded to ghost us as the token started crashing. And I know there's so much pain within the community because of this extremely hyped up launch, especially after everything else that's developed around IP World. But this truly wasn't a platform failure, but a case of severe misconduct stemming from competing licensing claims under private agreements under Pinkfong. That's my side of the story, and that's what happened. And I also want to be very clear, all of this is completely open for the public to discern among themselves. And you can see all the video clips at KBW of the endorsement happening live. But you know, another way I sort of think about this is like, imagine if Walt Disney sort of publicly endorsed the launch of a Mickey Mouse token at one of his summits, only to sort of backtrack 24 hours later over some sort of internal licensing issue. So I just want to be very clear, that's our side of the story, and that's exactly what happened.
Yeah. So Red, when you sign a term sheet with somebody to use IP World and to use their IP, what does that really entail holistically? Obviously, you can't get into every little nook and cranny here, but what does the term sheet allow you to do?
Yeah, so you know, just to be clear, the agreement we had was with one of their two official licensing partners, BBF, who's done multiple authorized IP product launches around the Pinkfong IP. One example is a huge mobile game, and another example is a big NFT marketplace. And so what transpires between these events into getting this term sheet approved is we get multiple legal counsels to approve the agreement, which very clearly stipulated that we would be able to use Pinkfong's mascot IP for the sake of token launching, as well as any associated marketing. And the most important part is this was also vetted by the co-founder of Pinkfong, who got on a call with BBF's co-founder himself too, to approve and vet the whole thing. That's why he even did the public evangelizing at KBW. So I just want to make it clear, there's multiple different legal parties involved. There's multiple people looking at these agreements. And that's why it's such a shame and such a puzzle to us, because this truly devolved from competing private licensing claims between internal licensing parties, of which we had no visibility into, despite all the vetting involved between all the parties, including Pinkfong themselves.
So would you say that you were acting in everyone's best interest by launching the token? Like, don't you think that maybe they got caught off guard that you launched the token, and then when it dumped, they kind of freaked out and wanted to cover their ass? So they were, you know, operating from a state of kind of, you know, wanting to protect themselves versus wanting to screw you guys?
I absolutely don't agree with that, because the whole premise of this entire agreement was extremely explicit. It was a token launch agreement for the Pinkfong mascot. We procured like weeks or even months worth of content with approval by their legal team, with approval that they would be able to claim with their official Pinkfong TikTok account. And again, this was vetted by the co-founder himself with direct calls between him and the BBF CEO. So it was abundantly clear from the get-go that this would be a token launch. There was absolutely no reason for any confusion around that.
Okay, so they literally agreed to the token launch itself as part of the entire plan.
The whole agreement was a Pinkfong mascot token launch.
Right.
So
okay.
that is exactly what they agreed to. Yes.
And when you are, you know, because like Story's value proposition is around IP. It's around being able to monetize, remix, and own IP in this world of kind of like AI generated content, etc. So had this gone smoothly, let's say, right? Hypothetically, this went well. What would have been the actual outcome most likely for IP World and for Story? Like, how would Story's protocol and IP World have contributed to the success of this specific IP that you guys were agreed to do a token for? Like, what would have been the ideal outcome here in one of these types of arrangements?
And this is why, we're really disappointed, because I got on a call with Ryan and he really expressed how much he loved the idea and mission behind IP World, which is building this new sort of breeding grounds for being able to remix IPs and directly monetize both the IP owners as well as the communities who sort of remix the content. One of the central product components of IP World is our UGC feature, where we basically reward people for, in this case, being able to create their own sort of ping pong mascot content and being paid in the token for doing so. But one thing I also want to make clear is our product did work as expected. For anyone who knows anything about IP World, everything hinges upon the moment our IP gets verified. And that's when you get the blue check mark on the platform. Until the IP is verified, all of the token allocation, all of the fees are locked and untouchable, and there is no officiation of the IP. And so what happened was we got public endorsement for the token, and it's right before the IP claim happened that the co-founder decided to go radio silent as the token dropped, and the claim was never able to be processed. But in a perfect world, what would have happened is, following his endorsement, we would have gotten that claim and we would have unlocked all those IP owner fees, allocations, and UGC rewards. But unfortunately, that isn't how it played out.
Well, we got By the Dip and Hodl saying in red we trust. We got PP saying go red. So you got some people out here showing some love.
Appreciate
Red,
it.
I'm curious, looking forward, now that this is behind us, what is the future of IP World's platform? How do you kind of bounce back from this and make this a win? How do you turn this into a win?
Yeah, I mean, I really believe this is also such a strong case study for our platform, because like the whole reason we started this is like, I truly believe if you want to open the floodgates of retail into like meme coin land, you have to solve the IP misalignment issue. Like it was literally last, November, October, seeing what happened with Peanut and Chill Guy, that I really noticed something big, which is people really intuitively understand investing in culture, but this licensing misalignment issue, this IP misalignment issue, that's the blockade. Like I completely disagree with everyone who thinks meme coins are over. I think we're just missing that retail unlock, and it's so clear to me that IP is that unlock. And this is just another huge example showcasing how rigid and fragile and opaque these Web 2 licensing structures are, and how even the biggest global brands, they still have these private IP misalignment issues that no one can possibly know about except the few internal, folks who are doing all these deals. And so what I really got from this is we're just going to make our platform 100 times better. There's so many things we learned from this process. Even though the product worked as intended, we can increase visibility of the claiming process so much more. We can educate users so much more about the power that the claim entails. And we can even do small things like during the claim process going forward, we're going to allow people to put every single minute detail that they can, including, who is the IP owner? Is it a licensee? Is it the actual original creator? These are all points of feedback that we're taking from this to make our platform 100 times better. And, it really sucks because we've worked on this for a year. I put my blood, heart, soul, and tears into this. Our team has stayed up countless nights not sleeping, only for this first legitimate big Korean IP launch to kind of screw everything over because the co-founder decided to drop out last minute for whatever reason, despite giving us all this endorsement. But for us, we're just going to move on. We're going to make the platform 100 times better, and we're going to do our best job getting much better IPs, making sure the verification and claims are as transparent as possible, and making sure communities get better opportunities in the future.
Beautiful, Red. I appreciate that. No, and I think that you're right in the sense that there is a clear lesson here about which actually serves the entire like it beautifully explains the reason why the IP world exists and why this entire idea and concept is even needed. And in this case, it's unfortunate that it had to happen in this way, but that's what it is. Steve Jobs from Twitter is asking, is IP World working with lawyers to hold Pinkfong responsible? I don't want you to say anything that you can't say. Be careful here. What is actually happening right now behind the scenes to rectify the situation?
Yeah, so besides just doing our best to move the product forward and try our best to get the best IPs on board to make sure everything's as transparent, as smooth as possible going forward, our legal counsel does say there are grounds for suing for public misrepresentation. That is the truth. You can't officially endorse a project as the face of the company only to backtrack the next day. It's really gross misconduct, in my opinion. And we do expect accountability to be made at the top of the leadership funnel.
Appreciate that, Red. Looking forward for you now, I kind of talked about this a bit, but what are you going to go and build next? What's coming for the platform? What feature sets? I know that you talked about some of the vision that could have happened here, but outside of just this case, what's coming next for IP World? How are you guys going to, make the end of the year a strong end of the year?
Yeah, so I think, the good thing that comes out of this is we're more motivated than ever. We had a huge timeline prepared. The biggest two features are, one, we're completely revamping our IP verification process to be way more elaborate, to be way more transparent, to add more details to the claiming process, and to make it as abundantly clear as possible that the claim is the point at which the IP does become officiated. So on a UX point of view, we're making huge improvements there. The second one is going to be the UGC feature that I mentioned, which is the ultimate goal for our platform is to align IP owners and community members. And it's disappointing because this was a vision that we shared with Pinkfong's co-founder, but I still believe in it. And we're going to do our best to get there. A world where both IP owners and community members equally get rewarded for producing content around marketing the IP. However, the most exciting feature that I haven't revealed to anyone yet is we will also be tackling the streaming world. We don't think streaming is the main feature for any of these launch pads. I still think UGC is the powerhouse. But it is a new form of marketing that we think we can uniquely nail because we understand DGen product mindset very well as retail product mindset. And so that's something you can expect by the end of the year that uniquely will be nailed by IP World.
Wow. Look at that. Wow. Okay. So let's talk a little bit more about that. What part of IP World makes streaming more powerful than other kind of platforms, or just what new idea can be brought to streaming due to the setup of IP World?
Yeah, so I kind of think of streaming a bit differently than I think Pump does. I don't sort of think about it as the main feature value add for our platform. I still believe the main mission that we want to evangelize is this sort of like making IP owners the protagonists and giving them a way to work and cooperate with their community to best build their IP as best as possible. And so I think of streaming as one avenue for sort of marketing that. I kind of think about it in the same way I think about UGC. You can think of UGC or user-generated content as a way of having users create short-form content and using it to market their IP. I think streaming is just an extension of that. It's just longer form video content. And so I sort of see these two things as two ways to get to the same end goal, which is building a new way of evangelizing IPs with community endorsement. But you can think of IP World's end goal as almost like an app package of different sort of marketing tools, whether it be, TikTok clipping, whether it be streaming, whether it be building your own Shopify marketplace. That's how we see IP World. And I really think our branding and our team is uniquely capable of building this out the right way.
Beautiful, Red. Red, I mean, I guess just one last thing. Like, what was the lessons that you took from this experience? Like, what would you do differently going forward, or what were some of the key learnings from this as a young guy in business? Kind of, you know, what did this experience show you?
Yeah, I think the biggest lesson that I have from this is you have to exercise incredible due diligence with every step of the legal review process. You know, despite co-founder endorsement by Pinkfong, despite approval by the actual company with a greenlit term sheet to execute this launch, there were still private licensing issues that we could not have foreseen. And that's why we are now making our verification process 100 times more strict. Even if we get this green light, even if we get this public evangelization, we want to make it abundantly clear that until the official IP owner claims on our platform with their official, you know, social account, nothing can be deemed completely legitimate. That's why a right way of thinking about this is until the claim is made, it's almost like you're speculating in a prediction market kind of matter that the IP owner is ultimately going to claim. And once that's done, then the grounds are solidified.
I mean, look, I think doing due diligence is always something that people, sometimes you just overlook it, whether it's a mistake or just in a rush or excitement. Yeah. And, you know, these things happen and then you don't ever do it again. So, exactly. You know, it's a learning experience for sure. Redman, I don't have much else for you. Any just closing thoughts from your end about where things are headed for IP World, and, you know, kind of what your just, you know, closing thoughts here, man.
Yeah, man, I appreciate that. I mean, honestly, man, like we really do think this incident was gross misconduct on, you know, the co-founder of Pinkfong's side. But I think it also, in a way, is proof that this system works, and it's proof why these IP guardrails are needed. We are only going to grow 1,000 times from here. We're not going to stop till we, you know, perfect this infrastructure and build the ultimate decentralized breeding grounds for IP monetization and remixing. And, you know, honestly, community is everything. And, you know, our users are the bread and butter of our product. And without, you know, their trust, none of this can happen. And that's why, you know, I just want to express so much, you know, frustration, but also empathy for all the users who got screwed over from this. But I want to say we are going to put our life's work into making this better and rectifying the situation and providing the best launches, the best experience, and the best app in the ecosystem.
Thank you, Red. See you soon, man. Thanks for coming on.
Thank you so much, man. Appreciate you.
Good luck. All right, boss man.
Peace.
All righty, guys. That was Red from IP World. Crazy situation. I would not want to be in that situation. It sounds really unfortunate for the guys, but look, I believe him. You know, I think he's an honest guy. I think he wants the best. I think that he's actually a good hard builder, and it's just a really unfortunate circumstance here from just these people who basically backed out last minute. So, yeah, guys, I think there's somebody in the chat saying, WIP World, any sort of IP partnerships with big leaders outside of Korea, next big partnerships. Sorry, Steve Jobs. We'll get to that one next time. WIP World, WPP. Thanks for tuning in. All right, guys, we're going to pull back up on some news, check out what's going on in the latest here, and then probably sign off here. So let me just pull this up, and we will check in on our favorite news channel, Yahoo Finance. Let's get some music playing in the background. All right, we are back up and live. Government shutdown is looming. That's okay. Let's go ahead and pull this up. Beautiful, 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 beautiful. This is crazy. This is crazy. This is Bitcoin. This is important, guys. So
I mean, you've got gold that's been higher because of the Fed easing.
Yes, the Fed easing, but also everyone realizing that fiat is dead.
Shut down. So you're seeing gold going higher. Silver as well.
Silver's going to hit all-time highs. Ben Cohen.
Outperformer this year.
He's calling for like 52, 53, and then a pullback.
Wall Street, yes, it may be overextended right now, but Wall Street is still saying
this lady's so bullish. It does have room to run. It's going to go on a multi-year, probably a decade-long rally has started a couple years ago.
The massive central bank that's buying.
The denominator is going to zero.
Right now, gold has made 38 all-time highs this year. That is massive. You also have, as I mentioned, central banks. But look, there's been also a graph that's been circulating through Twitter as well, that central bank holdings have topped U.S. Treasuries for the first time since 1996.
Wow, that's so bullish.
Today's value, the U.S. reserves for gold.
This chick is fired up.
$1 trillion in today's value.
I guess, Tom, make sense of this move in gold for us. Is it something, if you're not long...
Come on, Tom.
Do you get long gold?
Tell us about your boomer gold bug bags. I'm bullish.
Yeah, I'd be hesitant to do that. Gold is very volatile. It's going to give you an...
Oh, gold is not volatile, Tom.
It at the highs. But I think
take a look at my portfolio, Tom.
Really makes a lot of sense. I mean, if I, at the beginning of the year, were to write you a script for what could make gold go higher, it would be a weaker dollar,
yes,
general geopolitical instability,
yes,
confusion over U.S. trade and general domestic policy, which is making people sort of shun traditional investments and go. And
yes,
it's gold, right?
Bitcoin.
I know it's dipped recently.
Yes, Tom.
Well, also.
Yes,
then,
Tom.
Consistently elevated inflation. I mean, this is the environment where gold should be doing well.
Mm-hmm.
It is doing well, but like all things, and especially gold because it's volatile, it can't go straight up forever. So
no, Tom, it's going to pull back a bit. I think.
I would wait. It'll give you a better entry point.
Yeah, I agree. In 2026, it'll probably give us a better entry point. I agree. I agree with that, Tom. Good take. Good take.
Not break.
Bitcoin, look at that, green on the day. Everything looks good, guys. We're going to take a little break here. We're going to go full screen on the Yahoo Finance, and I'll be back in a second, guys. See you guys in a sec. I'll come back and we'll talk about some more news in a sec. Let's go full screen here, guys.
Welcome back to Yahoo Finance. I'm Ali Canal, live at the NASDAQ. Let's turn now to some of today's top analyst calls on Wall Street. First up, Morgan Stanley turning more bullish on the big banks. The firm raised price targets for large U.S. banks by a median 14%, setting street highs for Bank of America, Citi, and State Street, while downgrading Wells Fargo and U.S. Bancorp to equal weight from overweight. Analysts said they're rolling their valuation year forward to 2027, expecting M&A and capital markets activity to return to long-term averages as rate cuts support loan demand. New targets include $66 for Bank of America, $129 for Citi, $162 for State Street, and $854 for Goldman Sachs. Morgan Stanley also upgraded mid-cap lenders to attractive, pointing to a stronger backdrop as the yield curve steepens. Next up, shares of Electronic Arts jumping after confirming a deal to go private. Silver Lake Partners, Saudi Arabia's public investment fund, and Affinity Partners, which is run by President Trump's son-in-law Jared Kushner, will acquire EA for $210 a share, valuing the company at about $55 billion. The deal is expected to close in early 2026. pending shareholder approval, with CEO Andrew Wilson staying on. Ahead of the announcement, Wedbush downgraded EA to neutral from outperform and set a $200 price target, roughly reflecting the deal value. Analyst Elisa Reish noted that the downgrade is a reflection of limited upside now that a buyout appears likely. She still sees fiscal 2026 as a pivotal year, with Battlefield expected to drive growth and margins higher, but says that going private could help EA build out its mobile business and live service revenue. Finally, Comcast shares in focus after Bank of America cut its price target to $36 and kept a neutral rating. The firm now expects broadband losses of about 120,000. That's slightly better than its previous estimate, helped by seasonality and mobile growth. Media earnings should also get a lift from the timing of Peacock's NFL game, while Parks revenue remains pressured as Epic Universe ramps up. Separately, Comcast named Mike Cavanaugh as co-CEO of the company. He's set to join longtime chief Brian Roberts. We'll keep it right here on Yahoo Finance. We'll be tracking all the market moves throughout the session.
Now time for some of today's trending tickers. We're watching media stocks, Beyond Meat, and Kroger and DoorDash. First up, we got media stocks. We're watching the sector as President Trump threatens 100% tariffs on any movies made outside of the U.S. He first floated the idea on tariffing foreign films in May, causing shares in U.S. media giants at the time, like Netflix and Warner Brothers and Disney, to slump. The untested idea received strong pushback from the entertainment industry. It's not clear how such a tariff would work, nor how films would be valued for duty collection purposes. Those shares are mixed today. Next up, Beyond Meat. The plant-based meat producer plunging after making debt holders an offer that will erase more than $800 million of debt, but also most of the stock's value. 47% of the company's convertible note holders have already agreed to replace them with new bonds and common and in kind. That means Beyond Meat will be able to pay interest with additional debt rather than in cash. The company is now asking other creditors to take up the offer. The proposition comes as Beyond Meat grapples with weakening consumer demand for plant-based meat alternatives in the U.S. Finally, DoorDash and Kroger, the delivery app and grocery store, are expanding their partnership. Starting this week, DoorDash will offer delivery from Kroger's 2,700 U.S. stores. Since 2022, DoorDash was delivering sushi from 900 Kroger stores and flowers from 1,700 of them. But starting October 1st, Kroger's full assortment will be available to DoorDash customers. Both of those stocks higher. DoorDash, buy more. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up, much more markets action, including a deep dive into the FX market. You're watching Market Catalysts.
3, 2, 1. You don't need to be a pro to make big moves. Getting championship-level performance is easy when you shop at Crown Nissan. Our lineup is backed by contenders perfect for any playbook. Call your own plays and drive a new Rogue, just $319 a month. Or lease a new Altima, only $339 a month. Don't wait for the 2-minute warning. Get here now and save today at Crown.
This is exciting. I have a client writing in. Someone is listening with the sound on, and they make the point that most platforms can't offer the mutual fund and the ETF, and that platforms are still requiring fees from the ETFs. So talk to us a little bit about the distribution issues here potentially, and the idea that a platform is loath to, again, offer both an ETF and a mutual fund of the same strategy.
Well, I think that the big question here is what's the right thing for the end investor? And we work with lots of financial professionals. A part and the economies of scale of bringing them together, I think will ultimately benefit the end investor. And so we're all here to serve the end investor in the end of the day, and trying to understand what they want is important. But once you get that, I think that will move things in the right direction.
Gerard, final question to you. Will the ETF class be cheaper? ETFs are, of course, have been taking market share from mutual funds because of their cost and the ease of trading.
Yeah, Dimensional has taken a unique approach to that, in my view, which is for a similar asset allocation, similar set of services, we charge a similar fee. And you can see that for our standalone ETFs and our sister mutual funds. So our expectation is that the expense ratio should not be the thing that drives your decision about what vehicle to use. The tax efficiency should not be the decision to drive the input into the decision what vehicle to use. It should start with the investment proposition.
Yo, Leo, I'm going to hop on. So go ahead and just do the screen share with me on the left.
And we think that we've achieved that with our ETF complex and our mutual fund complex.
Just cut it.
This pushes us down that path even further, where Dimensional's investment proposition is what drives the buying decision. And then we have a lot of vehicles, that you can choose what's the right vehicle for you based on your circumstances.
What's going on here?
Understood. Gerard, thank you so much for joining us.
What's going on here?
And co-CIO of Dimensional Fund Advisors. I also want to thank 𝘬𝘳𝘬𝘴𝘵 and Eric Balchunas, who stayed over from ETF IQ. Now, coming up on Bloomberg Markets, Electronic Arts just hit the high score in deal making, selling for a record-breaking $55 billion in the biggest leveraged buyout ever. This is Bloomberg.
Whoa, look at that. Private at $55 billion. My God. Wow.
3, 2, 1.
Alrighty, guys. I'm going to probably sign off here. I just want to watch a little bit more Bloomberg. Sorry about this. Alrighty, guys.
Is backed by contenders, perfect for any playbook. Call your own plays and drive a new Rogue. Just $319 a month. Or lease a new Altima. Only $339 a month. Don't wait for the 2-minute warning. Get here now and save today at Crown Nissan. Online.
Becomes a consumer-driven drug, and that could be a big deal with maybe more out-of-pocket costs. And then I think it's just expansion of the indications. So,
oh my gosh, these weight loss things are crazy, man. I was at this outdoor gym, and this girl, I overheard her. She was like, "Oh my God, she's on Ozempic." Back in the States, it's crazy.
Lipids, so there's a totality of a benefit that I think the category I feel like has a lot
touch
of
some grass
and a lot of growth still left for sure.
How well, Jeff, do these drugs work? I ask because you have so many headlines and reports and studies. It's tough to keep up. I mean, weight loss, but then you have concerns about muscle loss that are out there. What do we know?
So what we know is, between Novo and Eli Lilly, the drugs, the injectable drugs, and it's a simple once-a-week injection. It's with a pen, subcutaneous, very, very much painless. At the low end, it's something like 12 or 13%. At the upper end, it's 20%. And that's the data. And that's probably the real world experience as well. It could be, I know probably it's not going to be much more than 20. The oral drugs are maybe slightly less potent, we'll call it 10 to 12%. But the key thing here is that these drugs are very well tolerated. That is,
this
I
is
think,
just
one of the
a whole other world.
Concerns for investors and really in patients is, nausea, vomiting, diarrhea, a lot of the GI side effects. Is that going to be kind of a deal breaker when you think about how long a patient could be on these drugs? As it turns out, in the real world, they're better. They're better than what we saw.
All right, see you later, buddy.
Patients start off at a very low dose.
We're gonna get you off the screen here. We're gonna come to a close. We're gonna talk crypto. We're not gonna be talking drugs anymore, buddy. Sorry about that. Alrighty, guys. Thank you for being a part of the show today. It was a fun show. We had great interviews, and then I got to experiment with my new kind of tech here. So as you can tell, guys, the show going forward is going to be more dynamic. It's going to have more feature sets like this, and we're just going to be scaling this entire kind of part of the show up. So yeah, guys, stoked to be here today. We have a busy week of people in Token in Singapore. Should be a good week for them. Thank you for being here. Thanks for being a part of the Rollup TV. See you guys tomorrow. Peace.